Welcome to DACOM Digital, the Digital Asset Compliance and Market Integrity podcast. Solidus Labs hosts conversations with the builders, movers, and shakers of a safe and regulated crypto and DeFi industry.
Welcome to DACOM Digital, where we delve into real stories on the compliance, risk, and legal professionals who are making the crypto ecosystem safe for everyone. My name is Spiro Antonopoulos. I'm Vice President of Client Solutions here at Solidus, and I'll be your host for today's session. Today we have a special guest, Imogen Bester, who's Market Surveillance Lead at Luno, a cryptocurrency exchange with services available to customers in 40 countries. Imogen will share her experience with Halo, our real-time market integrity platform, and we're really excited to have you today, Imogen Bester.
Thank you so much. I'm really grateful for this opportunity to be speaking with you.
Great, so let's dive right in.
Sure.
So it's a little bit cliche at this point, but we'd love to hear briefly what your genesis into crypto was and to Luno, your current role.
Yeah, sure. I have a background in systems engineering, and when I was working in data analytics at Deloitte, I fell in love with understanding how complex systems worked. I started working at a financial institution and became a securities trader at one of the banks in South Africa, and got into crypto thereafter when my curiosity for how the plumbing of financial systems worked led me into this space. So I joined Luno, which is exactly as you said. It's a crypto app that currently operates in over 40 countries. That's in Europe, in Africa, in Asia, and in Australia. And if you can believe it, we're already 10 years old. So we celebrated our birthday recently, which in crypto years is already, quite onerous.
70.
Yeah. We have seen quite a lot of change in this space, and especially operating in the amount of countries that we do, exposure that we offer our customers to in this space. So I work in the market surveillance team, which is under the anti-financial crime division. So together with compliance and investigations and account defense, we come up with ways that we can safeguard our customers in this space and make sure that they have compliant rails to get exposure to this asset class. And we really focus on Luno's core mission of putting the power of crypto into everybody's hands. And the more regions we take our safe platform to, we think that the better exposure people will have to really consider crypto as something that's here to stay rather than
Yes,
yeah.
That's a great story. It's a phrase that's been getting more currency lately. Proof of existence. So especially with recent collapses of Celsius and FTX, kind of the industry is all too well aware of kind of mainstream sentiment. But those of us that have sort of dug our heels in, we know the industry is here to stay. The numbers have continued to go up just in terms of adoption and usage, even if some of the less sustainable numbers have been slightly depressed for now, which I think a lot of people are okay with, because we're building not only technological rails, but also the compliance and the risk and the safety that's really required to protect consumers, to protect investors. Maybe before we jump into the kind of your work in the capacity of market surveillance, just taking a step back, can you talk about who you serve at Luno? What's your typical customer base? Does it vary by the jurisdictions that you serve? And then maybe if you could talk briefly about what your path towards, let's say, registration and licensing in different jurisdictions, without getting into too much detail, because of course there's, you're offering services in 40 different countries. But what has that looked like, broadly speaking, over the last few years?
Yeah, I can talk about this at length, so please stop me if I digress. But it is really interesting how we need different localization strategies for the different communities that we serve with this global outlook on making sure that we're compliant even where there isn't an obligation to do so yet in certain of the regions that we operate in, but we roll out the most stringent systems across all of our client base and then embed them, whether regulations exist or not, to really make the most of the information that we can get from our customers to, again, create that safe place for them to, engage with this marketplace. So our experience has been quite interesting across our different regions that we operate in, because some of the classic solutions that might work in a certain country are not really appropriate in some of the countries that we try and roll them out in. So we find in certain regions we need to really focus on localization and see which systems are appropriate, and if international system that is designed and trained on data that does not conform to how certain clients trade in certain regions, then we really need to take ownership of those systems, retrain them, and see the way that regulators in that region would prefer us to make sure that we be compliant. So it really means we have this global strategy that really has to adapt in the different countries that we operate in.
Yeah, that's been our experience talking to a lot of clients. It makes a lot of sense, and of course, we're not hiding the fact that we're very keen to feature our Halo platform and kind of your usage of it. So I think it's a good transition now to talk about what did life look like before you implemented Halo. And I think the point that you made was really interesting, which was putting controls and systems into place where they weren't necessarily mandated. And trade surveillance in particular is something that has, if you build a sort of Maslow's hierarchy of needs, it may be in the second tier after the controls you have to put in place to not go to jail for sanctions and OFAC, but it's certainly a fast follow after that. Regulators are starting to catch up to that, but we found that there are several clients that were actually, like yourself, wanting to put these controls in place for the purposes of creating safe markets and protecting their users. So what did it look like before Halo, and what was the kind of impetus to really make this a reality before the regulators were mandating it from your perspective?
Yeah, it's a good question. So we actually received regulatory approval specifically in Malaysia already in 2019. The regulators gave us a lot of leeway on the market surveillance side to really figure out the best solution that was appropriate for our clients across all these different regions. And the way that we managed risk before we integrated with the Halo platform was so static that it became an operational overhead that just consumed resources to keep monitoring static alerts, to update certain tracking dashboards that had to be, like I said, localized across completely different trading patterns between our different customers. So people trading in Nigeria trade completely differently to people in Indonesia, and we had to have different risk indicators be set up for the parameters that we observed across all those bases. So we found that sometimes regulators share requirements that certain participants would use as a tick box exercise to make sure, as long as they can prove that they do X, Y, Z, then they can move on to the next requirements. But by using the right solution, and that's what we found with Halo, especially because the regulators had already been exposed to it, it's a preferred tool that helps us to embed our own reputation by using it. So in the right tool, we were able to then transition our efforts from understanding how certain customers trade to actually being flagged for the real risks that are being flagged across all of our different regions, and then honing on those risks in a way that we knew that's where the real risk lied, rather than pursuing investigations before our integration that we suspected was where the key risk existed. So there's a comparison that can be made to that Donald Rumsfeld speech about unknown unknowns. And what we found is that when we weren't using the right tool, we were investigating and expending energy on these known unknowns that we would keep analyzing and try to be quantifying. But until we found the right tool that could appropriately interface with the way that our data works, we could then focus our investigative energy on the known risks. And that meant better use of our time that could then feed back to sharing insights with regulators, which we're doing now. And it's completely changed the way that before we would be triggering investigations and making sure that we communicated what we were doing. We're now far more hands-on. We're communicating actions that we're taking, which they're now using as case studies to help entrench the lessons learned in our space with the rest of the ecosystem.
Yeah, that's really interesting to hear that kind of real world experience that you've had, and I think you touched on two areas that I'm sure would make our salespeople very happy to hear articulated so well. And one is kind of the efficiency that having more precise signals brings to a compliance organization. It's no different than in TradFi, where historically and today you'll have entire floors back in the day when everybody was in the office dedicated to just compliance, and people would use the phrase the compliance burden. At the end of the day, it's an operational cost, and if you can manage the risk effectively without increasing that operational cost, so that you're just reviewing alerts without really thinking about the underlying risk and honing in that's where you really make improvement. It's really nice to hear that. I think it'd be interesting also to hear, without putting you too much on the spot, if you could sort of identify, are there particular features about the Halo platform that have helped in enabling sort of the precision of the alerting or the workflow of the investigations, or kind of how you're able to communicate out to external parties or even within the ecosystem of Halo users? Maybe are there a few features you could highlight there?
Yeah, certainly. So to again refer to a real world example where we receive our alerts, and although some of them might on first glance appear to be a vanilla false positive, the way that the platform is designed, when we trigger a deeper investigation into our specific risks, which we flag as higher, we can then reconsume the alerts that are triggered, specifically like the money pass transactions, for by not treating all of our customers in the same way and by segmenting our different users. For instance, by flagging a market maker compared to a high volume API trader compared to a customer who doesn't even use our exchange that often. Use the platform in a way that's different to just consuming alerts and treating all risks as equal, but we'll go back and learn how many of what type of alerting typology has this category of customer triggered and does exceed our risk appetite, rather than consuming alerts on an individual basis, but by really considering holistically what our risk appetite is and using Solidus's alerts as a way to help feed information back to trigger deeper understanding of how our customers trade.
That's a fantastic perspective. It's a better example than I could have expected. So really glad to hear that. And I think one thing that's interesting also is our perspective is exactly that, which is that the risks clearly have to be looked at from a holistic perspective. a trading pattern in isolation, out of context, doesn't really mean anything or may mean different things. And so having that information about the customer, the information about the money flow in and out is really important. This is a bit tangentially related to Halo, but I'm curious, how is Luno thinking about kind of the world of DeFi and different types of products? And are there things that you can share in terms of your expansions in that area from a kind of product and market perspective?
Yeah, sure. So Luno is actually a rather unique position on this topic, and it goes hand in hand with a philosophy that we've had from the get-go that essentially had a really robust coin selection framework where we would only list coin customers that would have to undergo rigorous examination by our teams to see whether the client base, which is mostly retail across, some countries that some of our competitors don't venture into, and by listing the coins that we have, we design the customer's trade purely through our instant buy and sell and exchange platforms. So when we investigated some of the DeFi tools and DeFi tokens that are available now, I think Luno's risk appetite is still not really there. We're switching on more tokens lately than before, but I don't think that the near future will include some of the DeFi tokens that some of our competitors are listing. So it makes my job easy because monitoring for rug pulls and for some of the investment scams is already inherently mitigated when customers are only exposed to highly liquid tokens like they're currently available on our platform. But there are some interesting things that our crypto security team are looking into. For instance, customers like being exposed to certain tokens, but they're also interested in making sure that if they're sending coins between platforms, that the transfer fees are as low as possible. So, seeing which underlying network we choose to, expose our customers to, or allow them to, facilitate, for instance, arbitrage trading between multiple platforms. It's a really important strategic decision that goes beyond just which coin to list.
No, it's good to know, and of course, different market participants in the ecosystem have different risk appetites, and they have different customer bases to serve. I would be remiss not to mention that we are heavily invested in monitoring in the DeFi space as well as in the CeFi space, and with our token sniffer tool, we're able to monitor in real time for rug pulls, honeypots, and different types of manipulations that are happening on tokens that are created essentially every minute. And of course, the risks aren't just kind of at the code level; they're also at the protocol level, and they're also basically products that are tied together. And then you get into custody risks with certain staking products. So there's a whole exotic map of risks that a compliance team has to take into consideration when expanding that product set. So it's your perspective is interesting, and it's certainly not uncommon.
My crypto security team, through your tool, they were fascinated by how much you're able to identify just at protocol level. So what you're doing in the space is definitely catching the eye of different participants, and they were really impressed by the flags that you guys were able to identify.
Yeah, I mean, I think it's just it highlights the fact that with all the benefits of permissionless protocols come risks. So no KYC barriers, immediate ability to create a smart contract, create a token pair, pump it on different social media channels, do A to A wash trading really brazenly with, to date, very few consequences, but then attract plenty of innocent capital that is still sort of, I hated the term Wild West. Crypto is the Wild West, but that area of
Yeah.
crypto definitely is still the Wild West. So, we're constantly trying to evolve in that space and help. There's obviously a lot of retail interest, but we're trying to help the institutions as well that are trying to protect their customers. Your perspective has been really useful, interesting. I'm curious, taking a step back, what's your sort of big picture prognostication for the industry at large? Do we still need that killer use case? Do we already have the killer use case? What needs to happen to sort of get to 2 billion users and 10 trillion market cap versus where we're at today?
I think that the way that each person in this ecosystem participates to either work with regulators on their consultation papers and define how regulations work going forward, or mitigating certain risks like vanilla compliance risks with money laundering and terrorist financing, or with cybercrime risks like scams and investment schemes that we were speaking about before. In isolation, it doesn't really add to the bigger picture, like you mentioned, but it speaks to that kind of like libertarian part of the crypto narrative that is starting to change the more people add to this ecosystem. So when we look at the individual impacts of, just my small, space and compliance that's, interests me the most, I look at some of the things that we've gotten done lately. So we've seen on social media how terrorists are now asking for deposits to be put into their bank accounts rather than in Bitcoin wallets. I mean, that's a massive one, right?
Yep.
When you look at 3.6 billion that was stolen in Bitfinex, that was then seized from Silk Road. The wheels might turn slowly, but everything is there on the blockchain, and the society is learning these lessons through crypto to see, to find that middle path between no rules and the type of regulations that actually protect people in the space. So there are so many examples like privacy tokens like Monero. The ecosystem is naturally pushing them out just through lack of regulated participants willing to list it. So no fiat on rails. People don't really there's like natural attrition that happens. There are so many examples, like even in law now, they are testing that case in Canada, the core hack from that indexed finance math guru. And it's setting precedents for, like the Ronan Bridge attack that we can all learn from and, help guide the space to bridge the gap between traditional finance and the utility that some of this technology does offer, and can be represented in the future, that might not only exist in the retail investment space, but through all of us integrating amongst our ecosystem, we level the playing field to bring this technology to more participants and help upgrade the financial system one investigation at a time.
You said it really well, so I won't try to repeat and add to the examples. And I really like your expression of the middle path between sort of the original values that brought some of the original innovators into the crypto ecosystem, but then understanding that for it to grow into a kind of globally viable economic ecosystem, that it requires the guardrails, and hopefully those guardrails can be built and are being built without the extra weight and burden of TradFi. And as you alluded to, there are some novel kind of manipulations and risks in crypto, but underneath them, it's the same type of risk, and everything's on the blockchain. And so in some ways, there is more light already, and our job is to continue to shine more light. And because where there's light, capital will flow there. People will feel safe. This has been a really wonderful conversation. We're thrilled that you're obviously a Solidus customer and a Halo user, and we're excited to continue to evolve with you and others in the industry to continue to make this a safe space.
Thank you so much for the opportunity to speak with you. Your platform is really doing interesting things, bringing the community together in this way.
Thank you, Imogen. Thanks, everyone. And we'll see you next time.